10 years of lending, and this is what I've learned. If you don't know who I am, my name is Zevi Shaf, and I'm an owner of a mortgage company in LA. And today I want to talk to you about 10 years of my knowledge. And I wrote down a list of things that I wish somebody told me on day one when I got started. Hopefully this helps you. If it does, make sure to hit that like button. With that, let's get started. Number one, you haven't earned a dime until the loan has recorded. I can't begin to tell you how many times I've actually funded loans and they had to be retracted. The loan gets funded and then it gets recorded the following days. Now, in some counties, you could actually fund and record the same day. However, just because the loan funds doesn't mean you're actually going to get paid. Everything needs to get ironed out between the borrower bringing in their money to closing and then escrow and title being prepared. And the reason I say that is because many lenders that you're going to work with, they're going to do something called table funding. And table funding is when you tell them when you're actually ready to fund the loan and everything's been signed off on your end. And then the closer puts it in the system and it literally goes on autopilot and they fund the loan, whether escrow and title are ready or not, whether the borrower actually deposited their funds into escrow to be able to close. And if they didn't, then the title company can't hold the funds. They have to give them back within a very short period of time. Don't count your commissions until the loan is actually recorded, because when it is recorded, that's when the deal's done, all right? So that was number one. Number two, it's all about marketing. So if you don't market yourself, you're gonna get no deals. There will be no commissions for you, okay? There's not gonna be any opportunities. So if you think that, like a lot of people that you talk to, and they say, well, my whole business is basically word to mouth. Well, nowadays it doesn't work that way. No marketing, no leads, no loans, no commissions. I wish there was a more complicated way to say it, but the opportunities that are available for you today to market are incredible. I mean, look, you're watching this YouTube video. This is me marketing to you, building my brand, right? It's free. However, it does take a lot of effort to be able to put together your marketing campaigns. You have to market to be successful in the space, all right? That was number two. Number three, the longer it takes, the less likely it is to close. I gotta tell you from personal experience that time kills deals. And I can't emphasize this enough. If you want something to close and earn a commission, you gotta make sure that everything goes smoothly and hopefully as quickly as possible. Because the second your deal starts to drag, you lose the momentum. And then the borrower starts becoming very frustrated. And a lot of times what I find is that they start looking for other options. And then all of a sudden, their cousin becomes a mortgage broker, the one who knows nothing about mortgages, because his friend told them that they're getting a bad deal. And now you have to deal with a very random online quote. And that does not belong in your transaction. So make sure to move things as quickly as possible. Number four, never stop calling. If you're busy, hire a virtual assistant. If the virtual assistant is busy, hire a different virtual assistant. You got to make sure that somebody is calling your clients. And if they never hear from you again, then in the back of your mind, you assume that they actually remember you. And the truth of the matter is, whatever's in front of somebody at a time that they need that particular product or service is typically what they go to first. So make sure that you continually reach out to your book of business. It's very important. Number five, in person beats over the phone. And what I mean by that is if something is important to you and you really want to close a deal, then you have to really make an effort to, if you can't meet in person, because that's literally going to eliminate a lot of roadblocks. People think that they can text and email. However, that's okay when something is not really important, but people are very emotional, especially when it comes down to lending, buying your residence. It's a very emotional purchase. They have to see somebody. This is also a very good reason why AI, in my opinion, will never take over lending, because people are not comfortable talking to a robot, even though they might have all the answers like a ChatGPT. it doesn't give you that same feeling that you get when you talk to a human being. So it's super important, and really that's the best way for you to be able to close any kind of transaction. Number 6, build a team early. And what I mean by that is you got to have a good processor, somebody who can help you push the transaction along. When I first started my business, for the first 2 to 3 years, I actually processed my own deals. I was a bit of a control freak. I wanted to make sure there wouldn't be any mistakes, and I want to make sure that the borrower gets the absolute highest quality of service and transaction. The problem with that is it really limits your ability to produce because you're wearing too many hats, and that's a big mistake. So make sure that in the beginning stages of your career, you identify somebody who's able to help you. Now, if you work with a contract processor, that's perfect because you can pick and choose the ones that work best for you. And like I said before, I do recommend being able to have some kind of an assistant or virtual assistant. They're fairly inexpensive because a lot of them work from overseas. I do not share borrowers' personal information though with virtual assistants. That would have to go directly to either myself or the processor. Lesson number 7, always offer solutions. What I mean by that is that I once had a transaction, and for some reason I couldn't offer the borrower what they were looking for, and I come to find out that several weeks later the borrower actually closed the transaction with another loan officer, and I was like completely confused. I was like, how? I offered them the best rate and a very competitive quote, but the problem was they went to another loan officer, and the loan officer told them that if instead of putting down 20%, they put down 50%, the rate would actually get decreased significantly and they would get a much better deal. And in my eyes, that wasn't even an option because the borrower told me that they want to put down 20%. So oftentimes, the borrower might tell you one thing, but there is another opportunity out there that you're not thinking is possible. And if you can reduce the rate, and if they're super rate sensitive, then make sure to address it in that way. Let them know that if they put more of a down payment, they can get a better deal. Number 8, this one's personal to me, and I think it should be to you too. It's just stay healthy. This business drains you because it's very stressful. A lot of times, even today, I had a transaction that's $1.5 million. I thought it was money in the bank, and then the borrower called today and they said, you know what, they decided they don't want to move forward with the purchase. It wasn't anything that I did wrong. I couldn't have done anything better, but things do change. And so the level of stress in this business is really high. You find yourself in front of a computer a lot. So what I would recommend for anyone to do is, walk, work out, drink water, do all these things that are really important for your health, because your future self is definitely going to thank you a little bit later down the road. All right. Number 9, rebuttaling appraisals don't work. I mean, look, in my opinion, over 95% of the time, nothing happens. All right, when I rebuttal an appraisal. And the reason is you might get an appraisal back and you might say, hey, yeah, but my property has a pool and my property has a view and my property is bigger and look at the comps that they used. There's compensating factors in the comps, and they do make these adjustments as they go. So if you're going to rebuttal an appraisal, make sure to pull out the comps that they used. Make sure you look at them closely, because the way this works is you actually have to send in the comps to the AMC, which is the hub, because we don't talk to appraisers nowadays in residential lending. And then if they agree with your rebuttal, then they would actually send it off to the appraiser to make the changes. 9 out of 10 times, from my personal experience, nothing ever changes. So just move on. All right, moving on to market to your past clients. It's crazy. If you've ever bought anything at Macy's, you know that for the next God knows how many years, you're going to get their catalog in the mail like religiously. And the reason is most people tend to rebuy somewhere if they've had a nice experience and reuse the services of a vendor that they've used in the past. And so it kind of goes back to calling your book of business, but at the same time, your best deals will come from your book of business. And if somebody's already used your services in the past, more than likely they're a very good candidate to use your services again, especially if you did a good job. Keep that top of mind, especially when you're marketing. All right, so that was number 10. Number 11, this is huge. Do not ever bend the rules of lending. And when a borrower tells you, how can we get creative? The answer is, we are not getting creative, none whatsoever, and I'm not the lender for you. I got to tell you that this actually came up a couple times, and ironically, super ironically, something that I'm dealing with right now on a transaction that I got an email from a lender yesterday. Something's in the transaction which I was completely unaware of, apparently may have been fabricated. And so if that's the case, that is considered mortgage fraud. That's a huge deal, and you can go to jail for that. So if a borrower ever tells you, how can we get this done by cutting a corner? We do not cut corners, ever. Don't do it. Not worth your commission. Definitely not worth mortgage fraud. You will lose your license, and you could go to jail. Really something we want to stay away from. Take the loan application and run the credit. That's number 12. A lesson that I've learned a very long time ago from actually several top producing loan officers. And when I asked them, what is the most important thing that I should know about this business? They told me, Zevi, when somebody talks to you and they're hot, they want to make sure they get this transaction done. Make sure the first thing you do is take the loan application. And that factors in a lot of different things. Psychologically, they've already spoken to you. They've given all their information to you. They don't want to go through and do it with somebody else. Number 2, take their credit card, run their credit. And the reason I say that is because the only way to really know if somebody qualifies is to be able to run their credit. You want to pull in their liabilities. And typically, for a savvy borrower, they're not going to want to rerun their credit. So they've taken the time to speak with you. That took a bunch of their time. They already gave you their credit card and they ran their credit with you, which means that that's not something they're going to want to do with another person. Hopefully you give them a good deal and they'll stick to you. It's just another way for you to be able to retain a borrower. Don't get lazy about it and say, I'll do it in a day or two. There's a very good chance that somebody else will take the app, run the credit, and you will lose the transaction. Number 13, get a credit card to order the appraisal report. Look, the more commitment you're able to get from a borrower early on in the transaction, the more likely you are for them to stay with you. All right, you don't want to lose the business. So when somebody gives you their credit card to order the appraisal report and they've just paid $500, there's a very small likelihood that they will walk away from the transaction, especially after they have paid $500 to go ahead and have you order the appraisal report. So I think that's really important to keep in mind. It's another thing that brings the borrower just a lot closer to you. Trust me, I've been through this many times. This one really helps you retain the client. Lesson number 14, always get your authorizations signed. Now, this is huge because before you start a transaction or before you even run credit, you have to get the authorizations signed, meaning that they authorize you to communicate their information with a third party and verify their information. You're not allowed to do any of those things unless you have their consent. So it's very important that you take care of that ahead of time before you even get started. As a matter of fact, it's the first thing we do when we initiate a transaction. Super important. That was number 14. Lesson number 15. Release the consumer report only and the score disclosures. So basically, you are not a credit reporting agency, which means that you're not allowed to release a formal credit report to a borrower. However, there is the option to provide a consumer credit report to the borrower, which is different than the actual credit report. And if they wanted to know their scores, then you simply give them a credit score disclosure, which is actually something that you should be giving them on every single transaction. Number 16 is also really important. And if you need a link to it, it's available on the resources at loanbrook.com. And what it is basically OptOutPrescreen. When a borrower signs up to have their credit run, they automatically become a trigger lead. And that's a huge issue because get ready for 500 other lenders who have bought the information of your particular client for $1. They're about to call them and pitch them the absolute best deal that they possibly have to try to steer them away from you. Pretty interesting, right? And so the way to make sure that your borrower is excluded from that is have them fill in the opt-out pre-screen. They can opt out for a period of 5 years, and make sure to do it, say, if possible, 2 to 3 days before you actually initiate and run the credit, if you can do it. I don't know how quickly it actually takes effect. That's why I say 48 to 72 hours. In many occasions, it will actually save your transaction. Number 17, make sure you have assistance to hit your production goals. Overseas help is super inexpensive nowadays, and you can get a virtual assistant for $4 an hour, and that person could work full-time, basically texting referral partners, and when somebody's ready to jump on a call or on a Zoom call, then you can jump in and take over. But if somebody is now reaching out, because look, let's just be honest, there's only so much motivation in any one of us, right? And so for you to be able to keep the ball moving 24/7 means that somebody is going to have a specific job, meaning marketing for you all the time. And the best way to do it, especially in the beginning, is proactively by reach out. So if a virtual assistant is able to text people nonstop for anywhere between 5 to 7 hours a day, your chance of getting a deal is going to be significantly higher. And if they're making $4 an hour, you secure one deal, you make $5,000, $6,000. You can pay with one deal their salary for months, okay? Sometimes even a year. And so I feel like that's a very, very good thing that you should take advantage of. If you're a broker like me, of course, you want to recruit people and bring them into your shop, educate them, help them. Help them help you at the end of the day, because you get a portion of their production. Number 18, set a flat fee commission to avoid working for free. Sometimes people will reach out to you for loans that are $50,000 to $100,000, $150,000. And they'll be like, okay, I'd like to do this deal. And even if your broker comp is 2%, then you're working for $3,000. Now, depending on where you are in your career, you might not want to do that, which is basically me. So I have a minimum flat fee commission origination of $5,000, and that does not include the processing fee. So I let people know that up front, because if they give me a loan for $50,000 to $100,000, I'm going to look, my minimum commission is $5,000. You still want to use my services. It doesn't waste my time, and I don't work for free. That was number 18. Number 19, make sure you're not restricted from social marketing. And I say that because social marketing is basically your billboard. If you work in any company that restricts you, I've worked at banks before, and every single post that I put out, I actually had to get approved. And in my opinion, that becomes very difficult, because the only way to build your brand is to be able to market like crazy. Again, social marketing is free. The effort to do it is not for everyone. For those who put a massive effort in social marketing, often are able to attract a very large crowd of people, and then your ability to close deal goes up significantly. And so, or your percentage to be able to close a deal. I find it to be, something that's invaluable, because visibility today equals opportunity. All right. Lesson number 20. Have your signature on every correspondent. Now, this is, it might sound small, but this is like your digital business card. A lot of times when you reach out to people, if somebody wants to get in touch with you, they automatically, pull up your email and they look for your signature card. And if there's no phone number or any way to reach you, it's very frustrating. Now they have to email you and sit there and wait until you email them back, and they might get frustrated, reach out to somebody else to help them out. So always make sure it's very simple to do. Set it up once, and it'll be a part of every single one of your emails, your digital business card. Lesson number 21, don't share confidential information via email. This is very important because I encourage borrowers not to email me copies of their W-2s, pay stubs, tax returns, anything that has confidential information. I share a link with them. It's a secure Google link and it's attached to their email. And they can drag and drop any information to it and it's encrypted. I find that to be, something really important to me. I take confidential documents and information very, very seriously. And I think you should too, because if there's ever an issue in that department, it creates a huge mess, not something you ever really want to deal with. Number 22, celebrate your wins, big or small. I think it's important that, once you achieve your goals, that you celebrate those goals, whether it's your first loan, your 50th, your 100th, maybe it's the smallest loan or the biggest loan. Find a reason to celebrate it, because at the end of the day, if you don't, then it just becomes a job, and you want it to be fun, you want it to be an adventure, you want to have goals. I think it's really important basically in everything you do. These are 22 things that I've learned after 10 years in this business. If you're watching this and you're in the loan business, then I'd love to hear if you have some stories to share. Just drop them in the comments below. If you want to join the Loan Brook team, 2025 is our year, and I would like to get more loan officers here. So please check it out. The description below, I'll put a link where you can reach out, send a copy of your resume. If you enjoy the video, as always, please hit the like button so other people like yourself can find it on the internet. And if you enjoy my videos, please subscribe. Otherwise, thanks again. Totally appreciate you guys being here. Hopefully this was useful. If it was, let me know what you learned in the comments below. I always enjoy getting your comments. And I'll catch you again on my next video. Take care.